What's up, everybody? I am with Vince from Options Insider, and over the weekend we ran a poll on our Instagrams for the most common trading questions. And in this video, we're gonna break them down. Some are gonna do with technicals, some are gonna do with psychology, and I'm confident you're gonna get a lot of insight and value out of this, and it's gonna help improve your trading.
So first, I want to say thank you to Carmine for inviting me out. We're just going to jump straight into the questions, and one of the most common questions we got had to do with trading psychology, which I think a lot of us out there struggle with, and one of the most important things to pay attention to and to learn when we first enter trading. This question comes and it says, trading psychology and what goes through your mind before, during, and after a trade. So when it comes to before, during, and after a trade, I think there's a lot of technical things to think about, but this question has to do with solely psychology. And I think when it comes to trading, we can't overthink before we enter a trade. We have to trust our strategy, trust our system. We can't second guess what we know works. So when it comes to psychology, there's not honestly too much going through my mind. There's a lot of technical things that I'm looking at. What's the ES? What's the NASDAQ doing? What are individual stocks doing? Where's my supply and demand levels? All technical things that I'm looking for in terms of confirmation. But when it comes to psychology, it's believing in my strategy, believing that I've seen this before, the experience of seeing these moves happen before, not second guessing myself before I enter, and making sure I believe in what I've seen before and continue to do that because I know it's something that's consistent and can keep me consistent long-term trading.
So for me, I try to make my trades as systematic as possible. I am a firm believer in less thinking and more doing. So I'm never thinking before a trade, I'm never thinking in a trade, and I'm never thinking after a trade. I'm constantly reacting to the information the market's providing me. And if you can react to that information and follow your system and manage your risk, psychology kind of gets blocked out of the way. We're humans, it's human nature to always have emotions and to always think and have psychology, but we have to block out the negative thoughts and the negative emotions that are preventing us from taking good trades, making us lose money, and that's stopping us from having success. So before I'm in a trade, I'm not thinking. I am looking for my setup. As soon as I see that setup, I'm not thinking about what's going to happen next, and I'm not thinking about something that I did in the past. My sole focus is what is happening right in front of my face right now. If you can switch your attention to the present moment, your psychology, your emotions are not going to be deterring you from making rational decisions.
So to Carmine's point, all those what ifs that come into our mind before we're entering a trade, those are the things that I think are most important for us to eliminate and to just simply trust in what we've seen before and to trust in the strategy that we trade.
Trust your system. And then after you take a trade, whether your system provided a win or whether your system provided a loss, any success or any failure should not influence your thoughts. You should move on. If you made money off of it, great. If you lost money off of it, oh well. Focus on the next setup because that next setup could be the best trade that you've ever taken.
So the second question we got today, which was also very popular, was options versus futures. And I primarily trade options. I've built a strategy around trading options and it's worked for me over the last 5 years. This same strategy that I use, which you guys probably know, the break and retest, can be used with trading futures. So I don't think there is something that differentiates them, whether one is better than the other. What fits your risk tolerance, what fits your personality, and at the end of the day, what fits the system that you trade on a daily basis.
Just like Vince said, it really depends on how you trade. And I will say, it doesn't matter what instrument or what market you trade, options or futures. What's more important is the strategy. I primarily trade the S&P 500 and the NASDAQ, and I love trading futures due to its organic price action, how well it works with order flow, supply and demand. It's a very powerful trading strategy. And with trading options in certain conditions, and I think conditions play a big role in if you just trade options or futures, because in certain conditions where there's volatility that's lower, where there's not much clear direction, where there's a lot of chop, then options might not be as favorable as trading futures where it's true organic price action. If I want to long the S&P 500 off of 4,000 and I have a target at 4,100, I know exactly how much I'm going to make if I'm correct on that position. If I'm trading options, and let's just say that takes 2 weeks for us to get that 100-point rally into my target, I don't know how long it's going to take, and I don't know how much I'm going to win if I'm correct, and I don't know how much if I'm going to lose if I am incorrect. I cannot gauge my risk to a 100% certainty trading options, whereas futures, there is a 100% guarantee before I enter that trade.
So while I primarily trade options, the most important thing is understanding the differences, the pros and the cons. As Carmine stated, on days where the market's choppy, when the market's staying in a very tight range, I understand that my options trading strategy will not benefit as much as a futures trader. In my mind, I'm thinking Carmine's probably having a much better day today, probably having better trades with futures, whereas when the market is trading sideways, the option contracts are decaying, data is decaying these contracts, and trading the SPY or the SPX or any under individual stock option is not going to bring me as much success as I would with trading futures.
When there's volatility and when there's clear direction, the leverage you get from trading options is not found on any other instrument. When there's volatility, clear direction, and the market's going to move in your favor in a fast amount of time with volatility, because options are priced out on those two things. When you get clear direction and volatility, that's when options, in my opinion, become favorable.
So the third question that we're going to answer today is, should I go heavier? My setups tend to play out. They're about 2 to 3 times my risk. Is it time for me to scale up? Is it time for me to take larger position sizes? So in my opinion, scaling up comes solely down to risk tolerance and the type of person that you are. After trading over 10 years, I know exactly where I'm comfortable. I know how much size I can have in a position and maintain a clear mind. I know exactly if I push myself a little bit too much, I can start to feel it. I can start to understand my emotions, and I start to know that I have too much size. So I think it is most important to find that sweet spot in your trading to understand what size makes you comfortable, and that comfortable feeling that you have when you're in a position will lead to success. The way I am, the way I trade, I favor profitability over an extended period versus trying to chase large gains. So I know at this point in my career, I can be consistent with an X amount of size, and I really don't have any plans of changing that. I'm very happy with where I am. I'm happy with the amount of money I make trading, and I know if I push it a little too far, I can start to spiral down a bad road in trading, start to question myself, start to question my abilities, and that's something that I solely do not want to encounter in trading. So in my opinion, you find the size that you're comfortable with. When you're entering a trade, you're not questioning yourself, you're not scared, you're not sweating, you're not emotional, and I think that is more important than trying to scale up and find bigger gains in the market.
To add on what Vince said, a lot of traders are positioned too high, meaning their position size is too large. Their emotions are becoming flared because they are attached to the money. They're scared of how much they're going to lose or how much they're going to win, and their emotional decisions affect their trades. But as far as this question about you're consistently making 2 to 3 times your risk, meaning you make $1,000 profit, but your risk is only $500 or maybe $400 consistently, then you have a strategy that works for you. If you can repeat your process, trading is all about repeatability, and it's one of the most scalable businesses. Just think about this. What other business can you scale up from basically nothing and 10x how much you're making in a day just by clicking an extra zero behind the screens? Trading is the most scalable business. However, you don't want to scale until your trading is repeatable, meaning how many times can you repeat that process, make sure your risk is small and your winners are much bigger than your losses. Repeat that day after day following the same process. Once you get the repeatability, the next process is scalability, and that's how you make more money. It's not working harder, it's working smarter.
So the next question that we got was, what's the first 3 things you look for when you see the pre-market every single morning? Now, you guys probably know I live stream every single morning, and there is a very distinct thing that we do every single morning. It's the first thing that I look for in the pre-market, and the way I look for it myself is I am always looking at the futures contracts. I may not trade futures, but the futures contracts play a huge role in what I am looking for on an intraday basis. As Carmine has talked about in his videos before, because I watch his videos myself, what if statements. If the S&P 500 is here, I'm only looking for this. If the NASDAQ is here, I'm only looking for this, right? So if the S&P is pushing into 4,200, which has been a very popular supply level lately, I'm not going to look to long anything into that level. I don't care where Amazon is. I don't care where Tesla's trading. I don't care what anything is doing if the S&P 500 is pushing into 4,200. I am not going to long a position into that supply level, knowing that that could potentially affect the market lower, which will drag other individual stocks with it. So one of the most important things I do in the pre-market is understand my supply and demand levels and build that plan before the market opens, knowing if I am looking for upside here, downside here. It is all based off those futures levels. So the next step for me in the morning after I understand my plan on the futures contracts is I will look through 4 to 6 stocks that I primarily trade. As you guys may know, I only trade a handful of stocks. I'll trade Tesla, Amazon, Apple, Google, Meta. All the big cap tech is what I'll primarily trade on a daily basis. And once I know my plan on, say, the NASDAQ, on Friday, the NASDAQ broke over 14,000. So I said if the NASDAQ is over 14,000, I'm not going to look to short it back into that potential new demand. I'm going to look for upside over 14,000. I know that that will influence other stocks higher. This is why I looked for a long on Microsoft Friday. So I knew that I wanted to look long because of the NASDAQ, and I will use that to make my decisions on the individual stocks that I trade.
The futures charts influence the individual stocks you're trading.
Correct. I'll look to build that plan with the futures, and then I'll know if I'm looking long or short on an individual stock.
And I think that's a very important thing to do. If you trade major market leading stocks, you need, it's vital to look out for confirmation to make sure the market is above or below your levels. You always want to look if the market is confirming your thesis. Now, there's going to be some times where there's relatively stronger or weaker names, but you want to make sure you get confirmation from the market. And even if you're trading the S&P and the NASDAQ specifically, you also want to keep an eye on individual equities because you don't want to be shorting the S&P at supply if Tesla's up, let's just say 5%, and Nvidia's up 10%. For me, what I look for in the pre-market, since I primarily trade the S&P and the NASDAQ, that's not to say I don't trade options on Tesla, Amazon. I still do trade them, but majority of my profits and the money I make from the market comes from the S&P and the NASDAQ. The first thing that I look out for is where are we compared to the previous day auction? Are we opening above the close? Are we opening below the close? Are we above the previous day high, the previous day low? Then once I get that information, I look at where are we compared to where we're trading last week and the current week. Are we balanced? Is the market above supply levels? Is the market below or inside of a range? Are we balanced? Are we trending? Where are important key levels based off the tape? Once I gauge this, now I'm looking at what the market is doing currently right now intraday. What are we doing overnight? Are we flat? Are we breaking above key levels? Are we inside the range? Are we below key levels? How is the volume? How is the overnight inventory? Are we bullish? Are we bearish? Once I get my pre-market gauge, now I let the market open up. I have my levels of interest. I wait for the market patiently for my levels of interest to trigger. I gauge the volatility. I gauge the volume. And the same thing about are we above the open, the close? I gauge that intraday as new information gets developed. As the market is open, it's constantly spitting information out to us. And as a trader, we got to read this information, use context clues. It's not going to give us the information, say, hey, Carmine, or hey, Vince, get long right now. It's going to say, hey, Carmine, hey, Vince, there's buyers at this level. Or, hey, we're holding this level. And you got to use context clues. Like we're back in kindergarten trying to decipher what this word meant. It's the same thing with the market. We're trying to decipher the information that it's presenting with us via context clues, and that's how we put trades on.
And for me, when those context clues come up in the market, it's a matter of risk reward and understanding our strategy and potentially taking the trade just because we know this is a good quality setup. We can't look at that information, we can't perceive that information, and then continue to question ourselves, should we take this trade? I'm scared to lose. I don't know if this is a good trade. If it aligns with what we're looking for, if it aligns with our pre-market plan, we have to enter the trade. The risk reward is there. If we win, it's a great trade. If we lose, we understand what went wrong in our position.
If you hesitate, that means you're getting late to the party. If you get to the party late, you're going to miss out on all the fun. You want to get in before the party starts because then you're going to have all the fun and you're going to get to experience it all. It's the same thing in the market. If you hesitate and you get your entry way too late, that means your risk is going to be much higher and your reward is going to be smaller. You're skewing your risk to reward, and any trade that you skew your risk to reward, you should not take. And if you hesitate, that skews your risk to reward. So somebody asked us to talk about a bias. And this is very important because I see a lot of traders having biases. They wake up, they say, oh, the news just came out, the market's bearish, or we should be in a recession. I want to play puts and I want to hold longer dated puts. Well, if you have a bias, the first thing I'm going to say is the market doesn't care about your feelings, the market doesn't care about you, and it doesn't care where you think it's going to go. If you have a bias, that means you are too concerned about an event in the future. If your worry is on the future, then how can you be concerned about what's happening in the present moment? So if you're too caught up on what's going to happen next, or where you think you're heading next, or where the market could go up or down, you're going to lose your focus on what's the most important aspect, and that's what's right in front of your face, what's happening right now. So if you wake up, and out of everybody that I know on Wall Street, they don't wake up, go to the office and say, oh, we're going to rally 1,000 points today. Or I'm bullish just because Jim Cramer on CNBC said he's bearish. If you're walking into the market with a bias, you're asking to get ran over by the market, and you're not asking to take rational trades. You're asking to make decisions based on a perception of the future, which is not even existent yet.
At the end of the day, Carmine and I are traders, and most of you watching this are traders as well. And the way that you're going to be successful, you're going to be profitable, is to come into every day having a fresh mindset, making sure you pay attention to what the market is showing you on that intraday action, making money on that move, not worrying about what other talking heads out there are saying, what your friend is saying, what your grandparents are telling you about the market. You know what you're looking at. You know what the intraday is showing you. Trade the intraday. Focus on your strategy. Don't care about what is going on long term. We can't be worried about what's happening in the future, like Carmine said, which is not even existent yet.
I think a big issue for a lot of traders is they go on Twitter for way too long. I got nothing against Twitter. I got nothing against people on Twitter. However, traders follow 30 other people, and 30 other opinions are conflicting with their own opinion. So if you have your own analysis, that's going to be the best analysis, and that comes with trusting your setups. And the psychology points we even talked about earlier in this video, it's just trusting yourself, having conviction in your setups, and not letting any other influence, whether it come from somebody else or your own thoughts, which are bad for trading, influence how you buy and how you sell on an intraday basis.
So we're going to go ahead and end the video on that note. I want to say thank you to Carmine, first of all, for inviting me out to Jersey. The next video is 100% going to be in Miami, which we're going to fly him out. He'll pay for it, but we're going to fly him out. We'll hopefully make more content together in the future.
If you like this type of video with us both in it, drop a like on it. That's how we know you like this type, and we can continue to make more collaborations like this. So drop a like, comment any questions, and definitely check out the links in the description below. But I think that's pretty much it. Peace.